Hi, everyone. Today we're going to be talking about a ton of the worst performing stocks in the year 2020. If you like this type of content, please consider commenting, liking the video, also subscribing to the channel would mean a lot, help me out a lot. But would love to hear if you guys have invested in any of these stocks, sold any of these stocks this year, bought any of these stocks maybe on a low this year, or if any of you guys just have a general opinion on these stocks and what's coming in the future for them. But without further ado, we'll get into the list. Number 10 on the list is Carnival Cruise Line Corporation, down 64% this year. So Carnival came off obviously a rough couple years with COVID, coming down from $40, $50 a share into single digits, rebounded on vaccine news into the 20s, but has really had a hard time getting back to profitability. Still lost, I think, $3 to $4 a share in 2022. Higher fuel charges with the gasoline prices going up didn't help. But overall, just a lot of headwinds and issues that continue to hurt the cruise industry's ability to turn a profit. It looks like for next year, they're forecasted to break even. Some analysts have them making a bit of money, some having them losing a bit. But they're really not going to return to profitability till 2024. So I think if you're willing to hang on that long and you don't think interest rates will skyrocket, impacting their huge debt load, that's kind of the investors currently in the stock. But most people just have sold out of the story, not willing to wait that long. And we've really seen that impact their stock in 2022. Number 9 on the list, Warner Brothers Discovery. So this one's just been a bit of a mess all around since they merged with, when Warner Brothers merged with Discovery. Right off the bat, the new company said they were disappointed with lots of the assets and the internal performance within Warner Brothers. Way less productive and effective allocation of capital than they assumed going in. And they just constantly lowered guidance on cash flow, EBITDA, increased restructuring costs quarter over quarter. They've been losing a lot of money from an accounting standpoint, but also not cranking out very much cash flow as well. So this one has a lot of potential in terms of the assets and the IP they hold, but they also have, I think, $40 to $50 billion in debt. That's going to be increasingly hard to manage with higher interest rates as well. You were seeing that kind of as a common theme early on in this list. And they really have to get their business together and turned around. I think they're launching their new streaming service where they're going to combine HBO Max with Discovery Plus in 2023. So that could potentially be a catalyst. But yeah, this one's clearly gotten hit very hard. On to number 8, PayPal. So PayPal skyrocketed during the pandemic, lots of people moving to online payments and online purchases. Unlike the first two companies, PayPal actually has a pretty solid balance sheet, buying back shares. So they don't have the same interest rate headwind, at least from an operating standpoint, but it still does impact their stock as they were trading at a pretty high price to earnings. And with interest rates going up, that all kind of consolidated downwards, and they've been hit very hard as a result. PayPal is actually a company that I think is a very strong company. It's just a matter of valuation and what multiples you're getting it at and what you think the future growth is going to look like. But I think in addition to interest rates going up, impacting their valuation, they also lost their eBay business, which was a good chunk of their revenue. I think probably about 10% or something like that. So that was a big hit that really slowed down their growth rate. We'll see if they can turn it around in 2023. VF Corp. VF Corp was a company that I was not overly familiar with. It's down about 65% as well, coming in at number 7. But they own lots of brands to do with footwear like Timberlands and Supreme and stuff like that in terms of apparel. So they're an apparel and footwear brand. I don't know a lot of the background in terms of why the company's gotten hit so hard, but a quick Google search kind of showed their CEO looks like is leaving the company. They keep missing and lowering guidance quarter after quarter. So it looks like just a lot of structural weakness in their business and continuing to lower their forecasts. So doesn't seem like a great story there, but it is down 65% on the year. If anyone knows more about the company or owns the company, would love to learn more about it from you as well in the comments. Going to number 6, Meta Platforms. So most people probably know the background on Meta, obviously with Mark Zuckerberg's untimely pivot to invest, 10-15 billion dollars a year in the metaverse. At the same time that the ad industry's kind of got crushed, has kind of been a terrible combination for the stock, and you're seeing that here down 65%. The stock's rallied a bit lately. I believe on news that they will be doing a round of layoffs. So obviously not the best catalyst for a stock to rally, but it hopefully shows that they are looking at making broader steps to getting costs under control and making sure they're allocating capital in the best way possible for the shareholder, not just in the super long term, but also more short to medium term. So we'll see how this one plays out. But when you strip out the virtual labs portion of the business, the stock's trading super cheap just on their core advertising business, despite kind of the headwinds they've had there. So this is definitely one that has a lot of opportunity, but lots of things to sort through in the numbers. Into the top 5, so SVB Financial Group looks like a bank. I'm not too familiar with the company either, but down 68%. Number 4, another company that I'm not too familiar with. Would love to hear if people know more about the company, but it's called Align Technology, down 69%. So these companies have just gotten crushed. You can even see throughout the year, it's not just like a one-time event, missed a quarter big. It's very sequential in nature in terms of their decline. So went from 650 down to 500, down to 300 midway through the year, and now down another 33% from there down to 200. So, part of this is just the glide path of interest rates probably, but there's other things probably going on their core business that continues to underperform and disappoint investors. So into the top 3. Number 3 is Tesla. Tesla's down 69%. Lots of broader economic components here likely that are bidding down the stock. Stock also rallied, as we know, crazy during 2020, 2021, up like over 1,000%, I believe. So some of this is just a natural correction on valuation likely, but also lots of the Elon Musk stuff, leaving the company, going to lead Twitter, now backing away from Twitter, becoming a very polarizing figure, not really knowing what's next in terms of leadership for the company, paired with their exposure to China manufacturing, is likely weighing this one down. Another one that's really interesting to see where it nets out in 2023, given that they actually, I believe, have a much more reasonable valuation now, like low 30s multiple. Okay, number 2 with the silver medal is Match Group. So Match Group's down 70% this year. They own lots of the dating apps like Tinder, obviously like Match, Plenty of Fish. I think they own Hinge. So this is an interesting stock that really rallied during 2020, 2021 as well. So you're starting to see a bit of a theme, if it's holding a lot of debt or companies that really just exploded during 2020, 2021, kind of coming back to reality a bit. But I think they've experienced some revenue declines, big profit declines on their core businesses as they're lapping periods that people weren't going out and meeting people in person as much. Another one I'm not overly familiar with the details in, but maybe one that's interesting to watch for 2023. And coming in at number 1, down 74%, is Generac. So I think they do lots of like in-home residential generators, stuff like that. But from looking at it, it looks like they just have missed every quarter really bad, brought down their outlook every quarter. So they're missing on lower outlooks. They were backlogged, but now they can't have demand keep up with supply. So a lot of like structural and fundamental business issues with their operation currently. would love for someone who may own the stock or maybe closer to the stock to chime in with a bit more here. But obviously a disastrous year. Hope that none of you guys have read this one all the way down, but not too informed with what happened here. All in all, these 10 stocks did not have a good 2022. Let me know what stocks here you think are going to bounce back in 2023. Some of the ones I'm looking at more than others would be Meta. Meta and PayPal are probably the two that I think have great balance sheets, great core businesses, and a lot of potential for long-term growth. There may be more on here that I just haven't looked into as much. So feel free to chime in with your thoughts. Would love your opinions. Once again, if you've made it this far and you like this type of content, please like the video, comment on the video with your thoughts. Would love any feedback, and also consider subscribing to the channel. I'd really appreciate it. Thanks.